Well, and Rise business analyst Bode Ososanmi joins me now from our London studio to discuss this and its effect on the emerging markets. Great to have you this hour, Bode Ososanmi. Now, why is today's decision going to be closely watched by analysts?
Well, Jane, good to be with you. This announcement today is extremely important. If you look at the global context, it's deteriorated somewhat. Investor confidence, as we speak, is at its lowest since the crash globally as a whole. The Dow and the S&P 500 is also at its lowest in recent memory, and this December is looking a bit like a disaster from a capital markets perspective. So all this, of course, is worrying to many, and the fear of the U.S. going into recession is something that many are concerned about. But apart from that, of course, there have been some conflicting signals that came from Jerome Powell in terms of the proximity of the rates now that they have now to the neutral rates. You remember that in October 3, he said there was still a long way from neutral rates, and then in November 28, he said they were just below neutral rates. So when he said, of course, they were a long way from neutral rates, that triggered a sell-off. So we've seen these conflicting signals, so the markets really want to hear him, to know his views on how close he believes they are to neutral rates. Then, of course, the pressures that have come from Donald Trump. You are very familiar with the tweets that he's been tweeting, that which is very unusual, particularly in terms of the very direct way he's trying to influence the Fed, which is not the normal approach. Obviously, he wants to see growth at a faster rate, and he believes if this hike happens, this will weigh further on growth. So these are some of the issues. The markets are jittery, of course, and there's general alarm that lifting rates, and also at the time when you are reducing the size of the balance sheet, you are really doing two things at the same time, which could trigger very unexpected results. And this is an area that economists really haven't seen before. The data hasn't been there. There's no empirical evidence that can be used to understand what could happen. So it could be that the Fed will be a bit careful, but obviously analysts want to know how the Fed see many of these issues.
So, Bode, what exactly are analysts, expecting from the Fed this time around?
The expectation, and what most markets have priced in, is that there will be a quarter-point increase in going from 2 to 2.25 to a range of 2.25 to 2.5%. Now, apart from that increase, the outlook for 2019 is likely to be much more dovish, and the tone of the Fed is likely to be even more dovish, even as they hike up. And many are saying that instead of 2 to 3 hikes in 2019, we'll be seeing more like 1 to 2 hikes in 2019, given that they have more flexibility, really. They've achieved their unemployment targets. Inflation at 1.8 is below their 2% target. So they have flexibility to wait and pause and watch the markets. Of course, we know that they will ignore Trump's pressures, which is what is expected. But of course, they would not be able to ignore their concerns that pushing the economy into recession in 2019 could be blamed to taking the wrong actions as far as increasing the rate. So this is what is expected. It's going to be dovish. It's going to be soft. And of course, with lower oil prices as well, this again makes a case, and the low dollar, this all creates the case to increase rates. And the Fed do not like surprising the market. And what they've hinted at, what they've signaled over the various previous press conferences is that this hike will come today. But of course, the external context and the data is something that they would be interrogating and be trying to understand, and they would need to confirm that they're taking the right decision before they do so. So it's not 100% certainty that they would hike, but the view is that it's almost 80% probability that that is what they were going to do today. But again, like I said, with dovish outlook for the rest of 2019.
All right, so Trump has been so direct and pretty much adamant on a pause on rates. Why is that so? Why is that the case?
Well, like I said, I think it's healthy to some extent. The executive and the Fed or the Apex Bank, they're looking at two different things. The Apex Bank is looking at stability, they're looking at the inflation and looking at quite a lot of other indicators. They would like to see a much more gradual increase in growth. And more importantly, they want the rate to go up to the neutral rate at which they don't need to make these adjustments. The stimulus that was enjoyed over the previous years at the time of the recession is no more required, and they need to adjust gradually and normalize. But of course, the priority of Trump is to take GDP growth as high as possible. He's been talking about 4%, 5%, and he would like to see, he's not very happy with the 2-3% range, and he believes the 3-4% is the kind of range that helps his voters in terms of jobs and so on. So although the economy is doing fairly well, but it could be much better, and he certainly sees the Fed as like bricks to his ambitions to achieve record high GDP growth. Obviously, that's very myopic, but he is entitled, I believe, to his views. But of course, he has to be a bit more tactful, and the Fed has to show that it has more spine. But many Fed chairmen had these types of pressures before. It's fairly normal, maybe even healthy to some extent, to have the pressure. But we have to watch how Trump manages the differences in his own views from that of the Fed chairman.
All right, Bode, of course, we do know that 2019 is the year just before elections in the United States, and pressure are likely to heighten. How do you see the independence of Fed faring in this period?
Well, some analysts have been speculating that Jerome Powell may even lose his job, or they could find a way of easing him out somewhat. I doubt if Trump, with all the other pressures, political pressures he will be facing, will be bold enough to do that. Obviously, the data will temper down the hikes, and of course, if we still continue to get a very hawkish tone, then I would be concerned in terms of how Trump may react. But my sense is that the tone will be dovish, not because of Trump, but because of the increasing evidence that they're moving closer to their neutral rate. So, given that the alignment is likely to be there, I'm not as worried in terms of a situation or a scenario where Trump finds a way of replacing Jerome Powell. And independence in this critical institution has been something that has been in the U.S. for a long time, and I don't think Trump can change that. But it's normal for Trump to continue tweeting his own views, and I think it will just be normal as well for Jerome Powell and the Fed to just continue to ignore them.
But just before I let you go, how are emerging markets likely to be impacted given the outlook for 2019? Well,
most emerging markets have already priced in perhaps a more aggressive hike trajectory. They were expecting more hikes, and they're expecting that in 2019 there will also be more hikes. Now that we're likely to see a softer or a more dovish tone, hopefully, then my sense is you will either see little or no impact on emerging markets, or maybe a slight respite in terms of the movement of capital out of emerging markets. Currencies like South Africa that are very much integrated with the global economy will tend to always react to the Fed decision. If there is no hike, we could see the rand going up slightly, but I'm almost certain there will be a hike, and maybe there will be a very short-term slight depreciation in some of these emerging market currencies as a result of that. But over time, that will normalize. Jerome Powell's view has always been that the external context, things like the trade war and the impact on emerging markets, although they are important, but he believes that most economies have adjusted enough, and they are not as directly impacted by the U.S. Rate trajectory, and I'm sure he's going to say that as well. And this Fed in particular has not been as concerned with external developments as the Yellen's Fed used to be. But let's see what happens. Clearly, the issue of capital flows with emerging markets has always been an issue. There's already been enough of an armada of funds out of emerging markets. I don't see that deteriorating in any material way as a result of the meeting or the statements that will be made today. But we have to wait and see. 2 p.m. Eastern Time, there will be the announcement and the press conference, 2:30 p.m. Eastern Time.
All right, then, lots of projections and expectations for 2019. Thank you so much, Bode Ososanmi, a Rice business analyst, for your time here.